Hello, let's talk about the 25% rule because it's often confused. So the 25% rule is quite simple. Your income must go up or down by 25% in order for the CMS to make a change. The way it actually works is when a case is open with the CMS, they take your most recent tax year and from there they work out the percentages of your salary that you have to pay for CMS. 1 year later, they do an annual review and they take your salary from the next tax year, work that out and calculate your earnings. Now, a lot of people might not get a salary change between 1 year and 2 years or 3 years, or they may go up by 3% 1 year, 3% the next year and so forth. So in the normal scheme of things, what will happen is the CMS would therefore either stay the same or it would go up by approximately 3% every year. Now, the 25% rule is all about dealing with changes of income throughout the year. So the 25% rule can only apply during the year. It is not used as the basis of calculation whatsoever, okay, when it comes to the annual review. And this is how it works. Person A has a job earning £10,000 per year. Their salary goes up to £12,000 a year. No, that is not a 25% change. Therefore, their CMS calculations will stay the same, and for the rest of the year, they can earn the extra money. Although that said, the following year, that increase in salary will be reflected in the future year's CMS payments. Person B has a job paying £20,000 a year, but this time they get a pay rise to £30,000 a year. Because that's more than a 20% increase, 25% increase, their CMS should be recalculated at that point and go up for the rest of the year. That's how it works. So if your salary is not changed by 25%, you don't need to worry. Often people say, do I need to notify CMS because I've got an annual bonus, or I've got this, or I've got that? Well, if it's less than 25% of the entire year's salary, no, you don't. Now, how does it work if you lose your job or your pay goes down? Exactly the same way. You have to have a drop in earnings by 25%. Now, during the COVID period, a lot of people had reduced salaries, but often those salaries were only reduced by 20% with the government making up the rest. So in those cases, the person effectively took home the same amount of salary, CMS didn't change. Now, if they were put on half-time and there were no COVID makeups, and therefore they earned 50% of the salary, then what should have happened is their CMS payment should have dropped because it was more than 25%. So to recap, has to be a 25% change, has to be in year, it can be up or down, but it has to be 25%. It does not affect the annual review because the annual review takes the whole tax year. Something to watch out for, a little trap. I hear of people telling the CMS they've got an increased salary of 20%. And sometimes CMS just accept that. You've told them you're earning more. They just accept that. So even though it's not a 25% change, there are stories of that being accepted, okay? Or they have a 30% change and then they have a reduction in their salary by 15% and CMS say, no, we're not reducing your salary. So they end up paying the higher amount, then they lose that salary. This particularly happens when people suddenly have a lot of overtime and then suddenly that overtime stops, okay? So just be wary. Your CMS will change if it's 25%, but that's based on the entire tax year. So if you make 30% extra in 1 month, you don't need to tell CMS because it's based on the entire tax year. Don't tell CMS because it will be wrongly interpreted. And then when you phone them the month later, they won't change it. Look, I hope this guide's been useful. I hope this will make your life a bit easier, okay? The key thing is obviously you don't need to tell CMS unless it's 25% increase or decrease. So there's no need for you to spend hours on the telephone trying to get through to them for them to not actually record an increase anyway. And that increase, by the way, should be measured over a 12-week period, because anything less than 12 weeks is often considered by CMS to be temporary. So if you're getting an increased salary and it's only going to last 12 weeks, you probably do not need to tell CMS. It will just get picked up at the annual review if it subsequently turns out to be slightly more than the 25%. Hope this helps. If you'd like me to make a video for you to answer a particular question, please write in the comments box. But in the meantime, if I can ask you to like and subscribe to this channel, that'd be really useful. The more people that are subscribed, the more questions I get asked, the more videos I get asked to do, and then hopefully the more people will have a less of a traumatic time dealing with the child maintenance service. Thanks for watching.